All right. Thanks, Kinga. Welcome, everyone. If you've been to our sessions before, or if you've given us a call or talked to us on the phone, my name is Andrea. I am the head of support and training here at Payment Evolution. I love doing these webinars because I love to teach you guys about all the tips and tricks within the system. And today we thought we'd do something a little bit different. Rather than going in depth into one thing, we had a look at a lot of the questions that we get via support and some of the common mistakes that we see that people make, and it causes them to get frustrated and have to call support for questions. As Kinga mentioned previously, we do have a lot of people here today, which is fantastic. We're really excited. As we're going, if you have a question, throw it into the questions box, whether it's with regards to something that I'm talking about or with a, what would be your frequently asked question, what you've had to struggle with, anything like that. Throw that into the questions box. We will answer a good chunk of them at the end of the webinar. And then while we're doing this, I'm going to throw this out there. I'm going to throw it out at the end as well. We're looking for suggestions for future webinars. So once a month, we do a training webinar, which is what we're doing today. And we try and go in depth into one or two topics within the program. So if you have something that we have not done already, because all of our previous training videos are posted, if you have something that we have not done and you want to learn about it, please send us an email to support@paymentevolution.com, and we will look at it for a future training session. So without going too far into things, our frequently asked questions and common mistakes. I have a series of slides, and what I'm going to do is I'm going to jump back and forth between the slides and the and my account. So one of the most, I've broken these down into sections. We've got setup questions, we've got running payroll questions, we've got reporting questions, and we've got paychecker questions. So first and foremost, setup issues. These are things that come into our support desk as people have this problem on a regular basis. So I'm going to help you get through them. Number one question in support is I added an employee and they don't show up in the pay run. Where are they? The answer is one of three things, and I'll show you. Just logging into my employee page. So when I set up an employee in Payment Evolution, when I click Add Employee, the first thing that would cause them not to show up in the pay run would be their hire date. This is 95% of the time the issue. 95% of the time, people put in the wrong hire date. And the reason is because when you add an employee in Payment Evolution, it will pre-populate today's date. But rarely are you running payroll for today's date. You're usually going to run payroll after you've added this employee for a date in the past. But guess what? You can't pay an employee that doesn't work for you. We wouldn't want them to show up if they didn't start work at that point, because we don't want to accidentally pay them. So the employee will show up with today's date of hire unless you change it. This is, again, 95% of the reason why an employee doesn't show up in a pay run. Okay. Number two, that accounts for the other 4%, is their pay frequency is wrong. So let's say you're running a payroll that is for your weekly employees, but this employee is set to biweekly. They will not show up. Only employees who are set to the same pay frequency will show up. So if it's not the hire date, go and check the pay frequency. Okay. And number three is if for any reason you have not entered a pay rate here, it will stop you. But just in case it doesn't, if you're doing an integration with some of our integration partners, it lets you go through without it. If for some reason it lets you go through, check the pay rate when you're on this page. This is less than 1% of the issues. Again, hire date, province of employment, and pay rate. One more thing to check. When you go to see your employees, To get that employee back in, you're going to have to restart the pay run. And always check where that employee is going to show up on the salaried or timesheets page. I can't tell you how many times people say, I swear the employee's not there, and they're looking at the salaries page and the employee is time-based. So hire date, salaried or time-based, pay rate, pays per year. And those will alleviate every single time why my employee is not showing up. Next. Remitting additional tax. Where did the money go? So this is part of our setup problems. So we get a lot of questions that say, I set up an additional tax deduction for my employee, but it's not on their T4s. It happens at year end. This is often where we see it. And it's because you're not reporting it correctly. So it's never been reported as tax, nor has it ever been remitted. So you know where the money has gone? Because that's always the question. Where did the money go? I deducted it from my employee's pay. It's sitting in the employer's bank account. Let me show you how to fix it. So when you go to add an additional tax for somebody, the number one reason why it is not getting reported or remitted on behalf of the employee is the GL code is set wrong. When you create the rule for additional tax, you must include the GL code for federal tax. So how we do that is we go to our company settings and we go to payroll options. This is where our GL is. This is our general ledger. And we look at the GL and we look at the code for federal tax. In my test account here, it's 825. Okay, I'm going to remember that number. Then when I set up the pay rule for that deduction, I have the slowest internet in this room.
It's just this one room in the entire office.
I know.
And it just so happens to be where we do our webinars.
Here's my additional tax rule that I've created. And look, it's 825. The GL code has to be the same. I'll say it again. It has to be the same. If it is not, it will not be reported. It will not be remitted. Okay? The other thing I will point out, if you've set it up, but it's not deducting from your employee's pay, it's because it's not enabled. You have to enable a rule to make it run. Okay? GL code, enable it. It'll run every time. Next. Oops. Employee changes. Okay, we get this question a lot. My employee has, we're changing their province of employment, or we want to change from contractor to permanent. And I can't. Why? Well, this is pretty simple. You cannot change province of employment because as soon as you get outside of Quebec, it could be a nightmare. So province of employment is a lockdown field. Now, if you're saying, I got one yesterday that somebody said, I changed my province of employment, but my employee is still being taxed in the old province. Well, province of employment and province of residence are two different things. So when I go to my employees and click on somebody's name, where I live is not necessarily where I work. So before you think about changing somebody's province of employment, please do contact CRA or your accountant to make sure that it's the right thing to do, because where somebody lives is not necessarily what their province of employment is. There are very specific rules with regards to province of employment, so you don't take it lightly to change it. Just because my employee is working from home and they moved from one province to the other, that could mean absolutely nothing for their province of employment. So check with CRA or Revenue Quebec, with CRA or your accountant before you attempt to make a change from one province to another. If you change it here, I had a client yesterday who said, I changed it. They changed it here. The employee's province of employment is under the payroll details and rules here. So they didn't change it in the right place. And this had caused a problem, but you can't technically change it here. The reason is because it can create a nightmare for tax forms, specifically with Quebec, but the field is locked down. So what you need to do, and this is going to be the same thing for if an employee is a contractor to start, and then you move them to a permanent employee. It won't let you change the employee's type. So I can't change this person from a contractor. When I click save, it'll give me an error. Employee type cannot be changed. So here's what you do. And first of all, here's the reason. You can't change the employee type or the province of employment because of tax forms. A contractor and an employee get two different tax forms. So in order for the system to provide both tax forms, essentially the employee needs to exist twice. So how you would do that is you would take the employee as they are right now and say, okay, this is what they were for the first part of the year. I'm going to change their SIN number to a dummy SIN. The dummy SIN you can use is 999. I'll type it in so you get a visual. 999. It's not going to let me do it. You can't see it. When I type it in, it just saves it with the asterisk. 999, 999, 998. That's your dummy SIN. Before you do this, if you're changing province of employment, please make sure that you submit an ROE because the employee SIN is going to be on the ROE. Once you change that, you terminate this employee, you hire a new employee, and you put in the real SIN. You will need to update the tax forms at year end because the employee, if we're doing the contractor to an employee, you're going to get a T4A and a T4. So on the T4A, it will have this dummy SIN entered. You will then change it on the tax form itself. This will allow you to get both tax forms for the employees and will prevent you from duplicating or crossing over information. Next one.
I have a question that would be applicable.
Oh, okay. Go ahead.
Area. So our hourly rate has changed. Then in the same pay period, the rate of the first week and second week are different. What is the right way to run the payroll?
Our hourly rate has changed. Sorry, read it one more time. Hourly rate has changed. The first week was the previous hourly rate. The second one was
is different.
Is different. Right. Sure. There is actually a great article on our help pages. If you go to help.paymentevolution.com, you type in wage. Type in the word wage in the search. You will find the article, but I'll tell you what it says right now. But if you want to kind of review, you can go to that article. So essentially what you would do is you would leave their rate either, it depends on what you want on the payslip. The payslip is going to show in the information section their basic pay rate. So you're going to leave it whatever it is. And then you would simply do regular hours for the first week and you would put in the rate that you want for the first week and the hours that would associate with the rate for the second week. So you would do it when you're running payroll. And that will, they'll get regular earnings for, it'll combine it on the payslip, but it'll be paid properly and you can show them if they want to see that calculation out. Okay. So next question, our next frequently asked question or setup issue, direct deposit. How do I set it up and how long does it take? Direct deposit, we often get people who say, I entered my employee's bank information and I put my bank information into the program. Why am I not able to pay via direct deposit? The answer is you have to actually set up direct deposit with us. So we let you enter the information and we'll store it. However, we do not activate ePay, which is our direct deposit remittance services. We do not activate it on your account, meaning we do not validate that we can take money out of your bank account until you send in a direct deposit form. So here's what the direct deposit form looks like. So what you can do is you can go to paymentevolution.com/epay to get the direct deposit form, or you will know, I clicked the wrong button. You will know that ePay is not set up because when you log into your account, it says direct deposit, sign up. If it says that, your account is not signed up for direct deposit and you are not able to use it and you are not able to pay your employees directly, and we will not be doing your remittances. So once it's been activated, this messaging will be different. It will say ePay dates, and it'll give you your next available payment date. If you run ePay today, this is when your employees will be paid. You will see that messaging change. It will no longer say sign up once you've got it activated. So if you need to know how to activate it, please do click on direct deposit sign up. It takes about 3 to 5 days for us to verify your bank account. The reason is we call your bank, and they don't always get back to us as quickly as we'd like. We do this because it is a legal contract that you're giving us authorization to debit out of your bank account, and we certainly want to make sure that it is all good before we do it. Once that's set up, the employee's bank information will just flow through, and it's already there. So you can set it up. You cannot use it until it has been activated. With regards to how long does it take, 4 business days is your lead time for regular direct deposit. Why 4 business days? Why does it take so long? Well, this is 100% the banks. The banks take their very sweet time to let us know if your debit from your company account has not cleared. So we cannot pay your employees until we verify that the payment has cleared, and sometimes that can take up to 2.5 business days. So the 4-day lead time allows us to make the payment with secured funds so that your employees get paid and we know that the funds have actually cleared from your bank account.
Is there any way to have 2 bank accounts set up for an employee? Some people have asked if they can split their pay between accounts.
That's a great question, and the answer is currently no. It is in our feature request, and it is something that we are working on. However, currently there is no dual bank account. So what we do suggest you to do at this time is tell the employee to set up an automatic debit from their account to push into another account. So that way you get the benefit of it. It kind of goes in their bank account and out on the same day. Okay, next one. Pay run mistakes. So I see there's a lot of accountants on here, which is awesome. You guys have some experience with our manual run, but what is the best way to avoid mistakes within your payroll? Okay, one is really simple. Take the time to review. We offer a variety of review options on the payroll. When you're running your payroll, when you get to the review page, there is 3 ways to review what you've done. So I've got a pay run in process. I'm just going to use it because I don't know what's in here, but I'm going to show you what it looks like. Oops. No, I've only got 1 employee in here. Here's my review page. I've calculated. I've done everything I'm supposed to do. Here's my review page. I know we're all busy and sometimes we're trying to get things in on a deadline. Really, if you take 5 minutes to review that it is what it should be, so many mistakes will be missed. Okay. I have 3 ways to review when I am on this, when I'm in at this point. I can click View Journal. It will download a PDF of the pay run in process with all my details. So maybe I like a PDF, maybe I like that report, that works well for me. I can do that at any time just clicking this button. If I've only got a couple of employees and I really want to drill down into each one, I click on the employee's name. And I get full details on what is happening with this employee. Okay. Option number 3, and this is actually my favorite. I go to reports, just hover over it, and I go to the journal register on the right-hand side. The reports that show on the first page are the final reports, but if I switch it to an interim report, this report is created every time I click the calculate button. I like the view option. The PDF is the same one that's in the pay run. The view one, on the other hand, gives me everything in a chart, and I can choose what I would like to display. So I can pick anything I want and add and remove things, and I can grab this any way I want. This, to me, is the best representation, but whatever works for you, there are 3 great ways to review what is happening within your pay run. Take a few minutes, review it. If you need to change anything, now is the time to do it. You can still avoid mistakes. You don't have to finish it like that. Go back to the salaries page. Go back to the timesheets page. Change what you need to change, and then you'll be ready to calculate again and review again. Also, on the review page or on the payments page, double check. This is what's this is these funds. Does this look right? Have a quick look. Does it look like it's a lot higher than it should be or a lot lower than it should be? Stop and find out why. If you get all the way through and you get to the payments page and you click through and you enter it and the payroll is finalized and you made a mistake, now what happens? Well, if you're on any of our business type plans, then you will need to contact us. If money is moving, there will be fees associated with having us do a reversal, which means a correction to the employee. So essentially, we will undo the incorrect pay. And there will also be fees associated with changing things on the bank file because the bank file has been created and we now have to manually go in and recode it. So there are fees associated with it. If you take the 5 minutes and review ahead of time, you're much less likely to have these issues happen, and then you won't have to pay for them. If you're on our accountant account, you know that you can do the manual run. You can do that reversal on your own. You still will need to contact us to change the bank file. We will not change the bank file based on a manual run. It does not create it. Any questions about that, Kinga?
Okay, so how do I, all right, we'll start with this one. How do I pay missed vacation pay on the next pay run? Since it's a calculation within PaymentEvolution, do I set up a separate payroll to accommodate?
If you missed vacation pay, you just add another earning to the next pay run if you're just paying it with the next pay run. Maybe I'm misunderstanding the question.
How do I pay missed vacation pay on the next pay run?
It just whether you're on the salaries, it's just adding an additional earning. So whether you're on the salaries or the timesheets page, you would approve the regular hours first, click the plus sign. This employee is set for banked vacation, so I would release the amount owing and type in my amount or my hours and my amount and click add and submit. And there it is on that pay run.
And if they don't want to do it within the pay run, if you forgot to run the payroll, just do a special run.
Yep.
Off-cycle pay run.
Yep. If you want to do a separate run, you can just, when you go to click run payroll, we'll start this one over so you can see what that looks like.
You'll only see this on the business plan and business plus though, so this is not available on the green.
Yep. So business and above will see regular and special. Accountants will also see manual as well. But if you can use a special run as an off-cycle run, and you would just say just pay the vacation amount. So you would just use that plus sign, add the vacation, and don't pay any regular hours.
Is there a way to record banked time?
A way to record banked time. Currently, no, there is not a way to record banked time within the system. It is something we are looking at as an upgrade feature for the future, but currently, no. You would need to maintain it outside of the system. This will allow you to pay it when you're ready to pay it. Okay. Next slide.
Andrew, I see your question in there. There's a slide that it's going to be applicable to, so just sit tight.
Missing the payroll deadline. So we have pretty strict deadlines here about when you can submit payroll for payment. We already know that it's 4 business days. And the deadline is always noon Eastern time. It's always noon. It's always Eastern. That does not change. So when we say thanks, guys, we're talking about our employees who did not get their timesheets to us in time, and we're finalizing our payroll at 12:30 Eastern time, and that's very frustrating because we wanted to get it within the window and we didn't. So it happens. There are a couple of options. You can write a check. When you write a check, you would simply set the employees to check on the payments page of the pay run. You can, I'll show you what that looks like. You can send us a bill payment. Bill payments are $10. It gives you about 2.5 days. So our most common example is most people pay on a Friday. And when you pay on a Friday, you need to submit the payroll by noon Eastern time on Monday. So when you hit the 12:30 mark, here's the thing. Don't finalize it if you know you've missed the deadline and you need to make it, because then you're going to have to get us to change the bank file, and you don't want to do that. So the best thing to do is, if you've missed the deadline, stop and figure out what you need to do next. Option number 1 is change all of the employees to check, and I'll show you how to do that once my Wi-Fi gets moving a little faster. Option number 2 is to set up bill payment if you don't already have it set up. Bill payment is available through almost every bank in Canada. There's a few banks that are still holding out. They're the federal credit banks. So you might not find it there, but almost every bank in Canada has PaymentEvolution set up as a bill payment payee. So just like you pay your Rogers bill or your Bell bill, you can pay PaymentEvolution. The cost is minimal, and it gives you an extra day and a half. Send the bill payment by end of day your time on Tuesday, and we can pay the employees for Friday. Okay. When I said change employees to check, any employee that's listed as bank, simply toggle them to check. Here's the cool thing. If you're on remittances with us, and let's say you decide you're just going to pay all of your employees by check for this pay run because you missed the deadline, you don't want to deal with bill payment, wire is going to be the next option, maybe you don't want to do that. What you can do is change every employee to check, and we will still debit your remittance amounts. You do not need to worry about remittances. It does not mess it up. Once you're on remittances with us, we will take the remittances regardless of how you pay your employees. So don't stress about that. Go ahead and change them to check, and you're good to go for that. If we're going to do bill payment, you can easily set up wire or bill payment. Now, wire is great if you're within the like Wednesday morning mark, because a wire will get to us faster than a bill payment will. So for wire or bill payment, before you finish the pay run, please do this before you finish the pay run, because otherwise our bank team is going to charge for a change to the bank file. You're going to go to company profile, payments profile. You're going to add a bank. The payment source type, because this account is not set up for direct deposit, you will have 3 options under payment source type. It will say bank, bill payment, or wire. Select the one that you're going to use and click save. All the details for what you need to do the bill payment for, or the wire instructions, will appear at the bottom of the page. And then you've got the information. And then when you go back into the pay run, your payment source information on the payments page will show that bill payment or wire as an option. Select it. You can then change your electronic payment state. Okay, so you select it here, do it before you finalize the pay run. If you go and finalize the pay run and it says, oh, it's going to be this date, and you say, well, I don't want that, but I'll tell them later. No, you will be charged for it. Do it before you finalize the payroll. You're already late. You finalizing the payroll now is not going to make it go any faster, and it's just going to be more difficult for you because it's going to cost you money. So don't finalize the payroll. Wait, add bill payment or wire, and then finalize the payroll, and make sure you've got the right electronic payment state. And this actually leads me into our next one. Sending a wire or a bill payment. So late pay runs happen, and sometimes we need a little extra time. Sometimes we have an emergency at home and we can't get into the office and we can't do it, or we forget, or we didn't get the timesheets. Whatever the case may be, there are fees associated with wires or bill payments, but they're pretty small when you consider that maybe you needed the extra time. And so we have those options. The number one common mistake that comes with wire or bill payment is not sending it. So despite how many times we tell people, okay, you've set up wire, you've set up bill payment, when you're done with your payroll, go log into your bank and send us the money. They don't. They forget. They don't realize that they have to send it. When you set up a wire or bill payment, we will not debit your bank account. You have to physically send us the money. And you have to log into your bank or walk into your bank for the case with a wire for some people. You have to send us the money. I don't have to show you anything with regards to that. That's just an FYI.
But if you need any help on this one, just search bill payment on our help desk at help.paymentevolution.com. It's important.
It is important. And I'm actually going to give you a better keyword to search. Search the word funding. It'll show up. It'll show all the details. It'll show you screenshots of how to add it, how to do it, what data you're looking for, how it works with certain banks. You'll notice that it's all the same with every bank, so you can just grab the information for any bank because that's what you're going to use. Okay, next. Another in payroll or after payroll question that we get pretty often is, my tax deductions look correct? My employee swears that it's different, or it's different than what my previous provider did and my employee's on salary, or it's different than what CRA notes. There's a whole bunch of things that you can look at as to why tax deductions look wrong. Number one, if you're working with the CRA payroll calculator and comparing it, there is absolutely the potential for a differential of up to, $10. This is because the CRA calculator uses ranges, and anybody that has ever looked at what the payroll tax tables look like, they say if you make between X number of dollars and X number of dollars, and your pay frequency is this often, then we're going to tax you this much. Well, that's great, but what happens is they average it based on the middle number of that range. What our program does is we take your exact amount that you're making versus the middle number of a range, and we tax it based on that exact amount. This can cause this differential of up to $10 that they're using a range. We're using the actual real amount, and we've had an accountant test this, and what they did is they ran payroll for the middle number of a series of ranges, and it came out exactly the same every time. So unless your pay is exactly that middle range, expect a slight differential. It happens. Other things to look at: benefits, deductions, rules. Is the employee set to tax exempt when they shouldn't be? There's a whole variety of things that you can look at within the employee's page to see if they are set up properly. So let's look at an employee. The bulk of your information is going to be on the payroll details and rules. Is it the right province of employment? Are they set to being tax exempt or EI exempt or CPP exempt? Are their TD1 rates the same? If you're running this through the CRA calculator, are you using the same information when you're crossing it over? Did you include the benefits? Did you think about that when you were looking at the CRA calculator? What about any deductions that you might have set up? All of these things can impact how an employee is taxed, and therefore it might not mean that it's exactly the same as one to the other. I've had many cases where I've seen people come from other payroll providers and they were getting taxable benefits that weren't being taxed. And so when we set them up properly and we had a conversation and they said, well, we're being taxed more. And I said, well, you should have been taxed from the beginning, and they weren't. So All of these things can impact why your tax deductions might look correct. If it's none of these things and you still think that there is something wrong, by all means, contact us at support@paymentevolution.com. We will always investigate a potential error. If somebody says, I swear this is wrong, I will always look at it and I will make sure that it is doing it correctly. And if it's not, it will obviously be addressed immediately. So regardless of what type of account you're on, if you believe that the tax deductions are absolutely incorrect, then please get in touch with us. But I can say that I have never seen that happen where it was actually incorrect.
This happens to me more times than I can count. The client does not close a payroll period when they are supposed to, so the remittance report does not I just scroll down. The remittance report does not match what they should actually remit for a period. I've been using the dynamic report to verify by pay date. Is this the best way?
Yeah, so this is the best way. The dynamic report will give you what you want. What you can check with the GL report or the remittance report. Well, no, it's not the best way. You know what the best way is? The pay run history report. That's my favorite report.
That's mine too. I always tell everybody this.
Okay, hang on. But before I go back, you saw that the next slide we were going to talk about is closing your period and when you should. I'm going to teach you best practice for closing your period so you don't have this problem. But also let me show you how to get the report that you need. So your client is closing the remittance report incorrectly. You don't know which remittance report goes with which thing. I get it. Pay run history report. Because when you remit to CRA, you don't have to break down CPP and EI and all those things. This is the coolest thing. Are you ready? Remittances are in a remittance column. If there's no, I have this. I have this account set up with Revenue Quebec as well. So in that case, I get remittance, which is my CRA remittance, and provincial remittance. If you don't have any employees in Quebec, you will only see information under the remittance column. So what you could do is you could say the amount I owe to CRA is for all my payrolls that paid in October. So I'm going to look at my 3 payment dates that are paying in October. I know I ran them ahead of time. 1, 2, 3. Check them off. Go to the bottom of the page. There's my remittance total for those 3 reports combined. That's your remittance amount. There's my provincial remittance amount for those 3 reports combined. I can use the check boxes on the left to combine them. The remittance is the full remittance for that pay period. Okay. If you want it broken down, you can. You can break it down by company portions and see those, but you don't need to. They are included in the full remittance amount. So that is the best way. But let's talk about best practice because it is a hugely common mistake as to when should I close my period? Because a lot of us, we go to run payroll and let's trash that. Oh, I must have already closed the period. So a lot of us, we go to run payroll and it says, is this a new remittance cycle? And we say yes. Don't use that. Don't use that button. It's there in case you forgot to do it right. It's there so you can stop before you run another payroll and close that period, but it should not be the way that you are closing the period on the regular basis. Every single time, either you finish a pay run, depending on how you report, either you finish a pay run or you come run your payroll for the last pay date for the last pay of the month with a pay date in that month, because remittances are based on pay date, or let's say last pay within that period. When they see the pie chart at the end of the pay run, this is what it looks like. Hold on. You ran a payroll. You see this page. Get the pie chart. You know what you do? You go to actions, end of period. Every time, either if you want to send the GL over to your accounting program, you do it after every payroll. If you want to wait and do it just for the remittance reports, You do it at the end of the period. So after you have finalized the payroll with the last pay date within that period, go to actions, end of period. Do it at the end. If somebody's doing it every time and then you want to go and look at the remittances, you can grab the reports and combine them, or you can use the pay run history report to look at the numbers. It was funny that you asked that because that was my next thing. Ooh, integration mistakes. I love these. This is a big one. Okay, so what do? We get a whole variety of questions saying it's failing. There's something wrong. It's not mapping. It's not landing in my accounting software. What's going on? The number is not the same as what you took out of my bank account. I'm going to go through each one. I do see where I'm talking too much and we're running slow, but if I'm going to go through each one fairly quickly. The number one reason we have mistakes in where we have errors with either the integration or sending the GL, it'll say GL not, GL not exported, something like that. The number one reason is it's not mapped properly. Okay. Have a look. I have two accounts mapped to this GL, Cashew and Zero. I'm going to say this. I say this at like every integration training session we do. Every field must be mapped. Regardless of whether you're using it or not, every field must be mapped.
Every field must be mapped.
Every field. And I will say, particularly if you are using QBO or Coming Soon Stage 1, it will absolutely 100% fail if you are not mapping every field. It will 100% fail if you are not mapping every field. I don't care if you're in BC and you have Quebec taxes, you have to map them. Just because you're pinging an account doesn't mean you're putting any data into it. But how these integrations work is every line item pings the account on the other end. If it has nowhere to go, it stops and it fails. Every account must be mapped. And if you add new accounts or you add new employee GLs, you must click import from other service and map those new accounts. I'll show you what it looks like because I'll click import from other service. You saw my GL here. Wait till you see how extensive it really is. It's going to pull in all my hidden accounts, all those benefits and deductions and things that I have added as rules. Every single one of them is going to pull in. And now what I have before it ended at vacation balance, I've got all these other ones. We hide them because we don't want it to be overwhelming. I've also got employee accounts. Those are employee GLs. Again, we hide them because we don't want it to be overwhelming. I've got a whole bunch of benefits. We hide them on the main page because we don't want it to be overwhelming. But if you add new accounts, you must map them and you have to click import from other service to be able to map every single one. Okay, where my GL didn't send. My GL didn't send because it's not mapped. I guarantee you, 90% of the time, every integration issue that we get, 90% of them is not mapped. Where is it? Well, it's in different places. In different accounting softwares. In Cashew, it's under your expenses. In QBO, it's under your journal reports. And in Zero, it's in your draft bills. This is where the accounting company has requested that it goes, so that's where it is. But what happens if it's a zero balance? Well, this also is very common. The only one that will not potentially show up as a zero balance, because there's some other things you can do, is zero, and you're using bank feeds and you've got ePay set up. Then you can get it as a positive balance invoice. Every single other one will come in as a zero balance. It is correct. It is mapping to two sides of your GL, your debits and your credit sides. And once it comes in as a zero balance, you're going to clear the accounts that are in your liability account against your bank feed. So exactly what's coming out of your bank account will be in your bank feed, and you're going to add in a fee report because we do not include the fee report. It's only your payroll report. And you're going to balance your bank account against your liability account. Okay? The zero balance is correct. So if you don't see it because you're expecting a dollar amount, look for the zero balance line item. You look like you have a question, Kinga.
I have a client that pays payroll and remittances via check for cash flow management reasons. We use QBO for their accounting. What is the best process for posting payroll transactions to QBO? Per pay run or monthly? If per pay run, how does that affect the report for monthly remittance?
It's really up to you how you want to post it. You can do it monthly or you can do it per pay run. But I can't tell you which one is better. I mean, I'm going to say you're the accountant or the bookkeeper and you would know what type of report you want. It's all going to go into a clearing account or your liability account. So you're going to balance those checks against those liability accounts. So if you want to do a lump sum, meaning you're doing it monthly, okay. And just again, as those checks come in, you match them to those clearing accounts. With regards to remittances, if you do it per pay period, you're going to have more than one remittance report. And at that point, you can use the pay run history report that I just showed you.
Perfect segue to your next slide, by the way.
Oh, what is a pay period versus a remittance period? A pay period, I don't even need to go into the program for this one. A remittance period is the period of time that you are required to remit or to report and send funds to the government for. A pay period is the days that are worked by your employees and that you're paying them for. So if you're on a biweekly cycle and you're working, let's pull up a calendar. Let's say August 28th to September 10th. That would be a pay period. Those are my work days that my employees did. But I'm a monthly remitter. My remittance period is September 1st to September 30th. Remittance periods are based on pay date, always, never work date. So it doesn't matter that the employees were working on September or on August 28th, doesn't matter. If they were paid in September, September remittance. That one's pretty easy, cut and dry. Ooh, why did my pay change? Kinga, why did my pay change? Maybe I got a raise. Or maybe not.
If only.
So there's lots of reasons. You're going to get this question from your employees, especially around this time of year, because people start maxing out. CPP and EI both have maximums per year. When your employees start maxing out, the system will know. It will, on the last pay where they're going to max out, it will take a smaller amount just so they get to the max, and then it will no longer take those taxes. When they have maxed out, it will not show that they're getting it taken off. So all of a sudden they're getting more. Woohoo! Other reasons your pay might change. Your benefits have changed. Your premiums have changed, and therefore your taxable amounts may have changed. Maybe the company is paying a long-term disability on your behalf, and that is a taxable benefit. And so when I don't actually know if long-term disability is a taxable benefit off the top of my head. Let's go with accidental death and dismemberment. I know that one's taxable just off the top of my head. So let's say that premium changed. Well, that premium changed, and what happens is your taxable income has gone up. And so when your taxable income went up, therefore your taxes went up. So you're going to see a change in your pay. Maybe there's a new tax law. Our program always takes into consideration any new tax laws when they're released and when they're effective. So if there's a new tax law that will be implemented, you might want to be prepared so so that your employees will know why they're getting a change in their pay.
All right. So the next frequently asked question, Tate, do we have your microphone working? Because I think that the next one is coming to you.
Yeah. So, sorry. Go ahead, Tate.
Is Zayzoon a loan? I love hearing this. Like, there's some ads and we hear stuff about loan sharks. That's always funny because far from it. If you guys don't know what Zayzoon is, Andrea has something to say.
Yeah, I was going to say, if you don't know what, sorry, I moved on to why did my pay change? And what I wanted to do is kind of highlight that this is the pay checker segment. So these are frequently asked questions, common mistakes within pay checker. Tate here is from Zayzoon. He's going to tell us a little bit about it and what these frequently asked questions might be. Take it away, Tate.
Perfect, thanks. Yeah, Zayzoon is available through the Paychecker platform for your employees. This is positioned as a free benefit to you as an employer. This is a benefit for a number of reasons, but namely it provides your employees with access to their already earned hours before their next paycheck. And so we see this as being something that's very important, especially with 63% of millennials that are living paycheck to paycheck in Canada right now. And really the only alternative they have is to either take a $48 NSF charge, a late bill payment, or in a worst case scenario, use a payday loan. $200 from a payday lender in Ontario will cost that employee $36. The same $200 to access Zayzoon will cost the employee just $2.50. It's a really responsible way for employees to simply get access to those wages that they have already earned and not take on any more debt in the process. Just a quick, actually, side note on a question that was asked earlier regarding employees splitting their bank accounts. So although that's a feature that's being built out in PaymentEvolution right now, a short-term solution for employees would be to use Zayzoon. And why I say that is because with the e-transfer option within Zayzoon, employees can choose which bank account they would like those wages submitted to. And so now, although this is not the ideal situation, because employees, again, for $200 will have to pay $2.50, it does give them a short-term solution in getting those funds into a different bank account.
You know, a thing I really like about the Zayzoon option is, personally, like if you're having an expensive month, which I know summertime has been for me at least, sometimes you just need to get ahead, you know, like kind of pay everything off, break even, so that you can kind of start over. And that was kind of where I found Zayzoon helped, like a lot of my friends actually even. So yeah, even if it's just to get ahead, I think Zayzoon is great for your employees.
Yeah, thanks, Kinga. It's definitely not a source of income by any means. It's really just a cash flow smoother. And so if you are someone that has been repeatedly paying NSF charges or have been taking out payday loans, give yourself a break by using this to access your wages instead.
Okay, so the next question, I think that kind of flows into that, was paying in advance to your employees or Zayzoon. So what is kind of more beneficial for you as the employer and the employee?
So this is totally a personal preference. We see Zayzoon as a complete benefit to employers because of a couple of reasons. No employer capital is tied up in this process. It actually has nothing to do with the employer at all within this process. The employee simply requests their wages early. We give them an advance on that through our own capital pool, and then debit that from the employee's check when their payday rolls around. So really no added work on your side of things. It does not disrupt your cash flow at all. It keeps your employer-employee relationship intact. I know from being an employer myself, having employees come to me and ask for advances isn't something that I would like to deal with, nor is it something I want my admin staff to deal with. And so we see this as an added benefit that really helps employees and helps reduce that workplace stress, financial stress, and increase productivity.
That is awesome. Yeah, we purposely brought Tate in here today because we've been getting a lot of questions about Zayzoon, both from accountants and bookkeepers and business owners, because, you know, people see advance or pay advance and they automatically assume that there's a huge fee involved, and it's actually the complete opposite. You're saving your staff a ton of money and yourself as well.
Yeah, you're saving yourself a ton of time. And this is the thing that I love about Zayzoon, and that we get just amazing feedback is, you know, there's a lot of employers out there who give advances to their employees on a regular basis, but they have to record them and then they have to take them back. And if the employee's on direct deposit and, you know, you've given him $200 in cash, you have to record it and then take it back. It's a hassle within payroll. It's doable, but it's a hassle. Whereas the employee can access that same $200 for, sorry, Tate, how much did you say that was?
Yeah, $200 for $2.50.
That's amazing.
Yeah, and by all means, if anyone has any questions, just visit zayzoon.com. There's a live chat box there. We have an incredible response time, and just ask for Tate, and I will answer any of your questions that come up.
And if your employees have any questions, as Andrea showed you in the previous screen, within Paychecker, that's where they can find Zayzoon. So I think she's pulling it up for us again.
Yep.
There's just this little box in the corner in the far right where it says Pay Advance, Borrow from the Bank of You.
Yep. And this will give you actually access to it if you're set up for direct deposit. So you do need to be set up for direct deposit because we need access to the employee's bank account so we can put money in. But we do, so when you're signed up for direct deposit, this will look slightly different. This is a live account, so I can't have it attached to a bank account.
Anyways, thank you, Tate.
Thanks, Tate.
He's going to be here for a couple more minutes if anyone has any questions for Zayzoon. In the meantime, since we are done with our slides, I have one more question in the questions box. If anyone has anything else, feel free to throw it in. But Andrea, I am linked with Xero. Why will it not allow to link specific deductions? For example, expense reimbursements to a balance sheet account. I can only see income statement accounts.
That is because the accounts are set up on the general ledger within PaymentEvolution to match the account types within your accounting program. By the way, if you're linked with Xero, you shouldn't be using expense reimbursements through Payroll. You should be doing them through business payments, but we'll talk about that in a second. Let me go to my login page and show you what I'm talking about. So when you are setting up your GL within PaymentEvolution, it matches account types. Assets match to assets. Liabilities match to liabilities, and expenses match to expenses. So it only pulls those same account types. So when you're talking about an expense reimbursement, it's probably coming up under the expenses, and therefore it is only pulling expense accounts, which are income statement accounts versus balance sheet accounts. So you cannot match an account type, namely expenses, with a balance sheet account because it's not the same type of account. So it will only pull by account type. Now, that being said, you should not sign up for direct deposit if you haven't already, and you're doing expense reimbursements. Expense reimbursements are not payroll. They should not be a part of your payroll. No, in no way should they be a part of your payroll because they are not a payroll expense. So rather than trying to pull them out of the GL, set up direct deposit if you haven't already, and use our business payments feature. I'm going to do a quick demo of what business payments looks like. And that way you can see how easy it is. Give me a second. Okay, here we go. Business payments in Xero. Here's how easy.
A 1:15 video.
Yeah. So what you would do is you would log into your Xero account and add a bill that you need to pay and enter all of your details. Because technically, an expense reimbursement to an employee is a company expense. It is not a payroll expense, so it should be added here. Once you've got that, once you've created the bill in Xero, you go into PaymentEvolution, you click on business payments, and your outstanding bills are automatically pulled in. You select the ones that you want to pay, and you tap or click pay. You enter the employee's bank details, who you want to allocate the payment to as far as your bank accounts, and an email address for the employee, which is essentially now a vendor. Click finalize and pay. It's blue or green depending on your screen resolution, and the invoice is paid. That's it. Go back to your Xero. It's auto-reconciled. It's marked as paid. There's no question that this invoice has been paid to the employee. The employee also gets an email with the information, call it reference, expense reimbursement, whatever you want, and they get all those details. This reconciles it with your books. It does it the proper way instead of trying to just give the employee some money and then reconciling the books afterwards, because it's a totally different type of expense. It is not a payroll expense. Any other questions, Kinga?
So do I need to set up a different contact for each employee? Can you expand on that?
No, you would just, yes, you would set them up as vendors within your Xero.
Oh, okay. So you got the question. Perfect.
Yep.
All right, guys. Well, it is 2:00. We survived the full hour.
Wow. Sorry if I talk too much. If other questions come up, do feel free to contact us at support@paymentevolution.com.